first panel discussion of the day. So, this is going to be an expert insight session on the evolving landscape of life science investment, funding, and alternative sources of capital. And with me to talk about these exciting things, I have two seasoned veterans, Johan Kördel of Sound Bioventures and Pieter van der Meijden from van Lanschot Kempen.
Maybe stick to Kempen, easier.
Kempen is quicker to say, if not easier to say. Thank you so much for joining me today. Well, to give a short backdrop, we've had a challenging market environment. Everyone already knows that. But there are wars, global insecurity, macroeconomic pressure. Fundraising is increasingly tough than for certainly in the public market, but arguably also in the private companies, for the private companies in life science. First, before we dive into that, maybe you would like to give yourself and your organizations just a short, brief presentation. We can start with you, Johan.
So Johan Kördel, I'm a product of Lund and spent a decade in pharma, a decade in biotech, and the last 15 years venture investing. So 2 years ago, we started Sound Bioventures, which is a Swedish venture investing fund that invests in private clinical stage therapeutics companies in Scandinavia, the rest of Europe, and the US, 3 equal portions.
And how much money do you have?
We have 116 million euros to invest. We have committed money to 6 companies and probably have another 6, and then reserves to follow.
Great, thank you. Pieter, what do you do, and what does Kempen do?
Yeah, so Kempen, we are a Amsterdam-based investment bank, offices in New York and Amsterdam. We focus on 4 sectors, one of them being life sciences and healthcare, mainly working with European life sciences and healthcare companies, assisting them in the raising of capital, M&A, IPOs, both in Europe and in the US.
You yourself, you're based in Sweden though, and you work with any Swedish companies?
Indeed, I am a love refugee, so I came here with my Swedish wife, and no, indeed, we work a lot with Nordic companies for the simple fact that there is an enormous amount of innovation in the Nordics when it comes to life sciences and healthcare. And there are, I think, just over 250 listed healthcare companies in the Nordics. To give you an idea, there's 110 in Belgium, the Netherlands, and France together. So that's really, it's an enormous market.
Which we might dive into later. So I think we could start with an easy question then. So looking at the many current challenges that we have in the market and the financial climate, it looks kind of grim. But when can we expect this to change, Johan?
If I had the answer to the question, I wouldn't tell you guys, because I would trade against that, of course. But I think for us as investors, and we're fortunate because we're in the beginning of a fund that has money. So we will have the same problem you have in a few years if the markets haven't let up. So for us, this is a fantastic situation if you're private, because the valuations of your companies, which we can come back to, is more compatible with what we see in the private market. So it's fantastic. But I think we have to look forward to the immense innovation that is ongoing. We're all getting older, we're all getting sicker, we need innovation. The innovation is happening faster and faster. The buyers have patent cliffs that they need to replace products with, so they need to collaborate or acquire companies like yours. And it will happen because they have $1 trillion to do it with. So if you have money, no problem. If you don't have money, you have to be careful with the money because eventually the markets will come back.
Yeah, I think that if you don't have money, it's the bigger problem for sure. So Peter, what's your take on the current state of affairs, and will it change, and when?
Yeah, no, indeed. Obviously the reason we're here is that having this panel is that it's challenging. I mean, if it was all great, the discussion of today would be: I'm a preclinical company. I just raised 500 million. What do I do? So obviously
we've had those panels too.
Yeah, 3 years ago. And no, but really what we're seeing is I would say a shift in how to fund biotech and life sciences in general going forward. We just came out of a period of 10 years with low interest rates. Funding was easy. We've seen an enormous liquidity bubble. To give you an idea, between 2019 and 22, there were some 400 IPOs on NASDAQ US biotech companies, whilst it was 1,000 in the previous 30 years. And a lot of them were early stage, a lot of them were preclinical, and they are now coming back to the market. So there is an enormous funding need, whilst at the same time, obviously, interest rates are up. And more, I think we're coming to the realization they might stay there for a little bit. And that, especially for a generalist fund manager, is an enormous challenge, because biotech at 7% in a DCF model is challenging, considering we need to fund you for an additional 9 years. And that's what we see in valuations. And if you look at the valuations of the companies that have IPO'd that were early stage, they are in the US on average down more than 70%, purely based on the interest rates. And I think on Friday we got another nice reminder that, or not nice, that the 10-year reached the highest level since 2007, and immediately market turns. And I think in general companies need to get their mindset different in a way that the ease at which we've been able to raise capital is gone, and there is a new reality in which interest rates will probably remain higher. There is indeed an enormous amount of money available with specialists, but from the generalists, retail, etc., that's really changed. I'll just add one more thing, and that's, I think, something that's incredibly important now going forward, is that companies need to change their mindset. What we see very often is you have companies that see their core business as we develop a therapeutic or diagnostics or medtech, and the other part of our core business is raising money. And they do that ongoingly. CFO, IR, CEO. Their IR trackers are a mile long. But we also see companies, unfortunately, that once a year they think, oh, it's time again. We should call a bank. So that mindset really needs to change.
Step up one's game. I should also say that when you hear something interesting or you come to think of a question, please use the app and send them in, and I will try to pick them up if we have time. Or I can prioritize your questions. They're probably better. So, I mean, you've touched upon it, the interest rates and so on. What are the key factors that need to improve then in order for financing and investment activities to come back to, say, pre-pandemic levels, or will they even?
I can take that. We just came back from a trip in the US meeting investors, and there some investors also said it surprises us at how people think interest rates are going to be back to where they were within 6 months. In developed companies or developed countries, it takes longer for them to come down again. Plus, there's this enormous funding need of all these companies that came to market early and now need funding. But I think what will really help companies is that they, especially, well, maybe not the ones that are in desperate need right now, but the ones that are starting their journey, is to really look at quality investors. And I know that sounds like a cliche, but very often earlier stage in 2019, 20, we would hear, yeah, we're speaking to specialists, but they're only valuing us at 50 million euros. And we can probably get an IPO value of 100 or more. Plus these specialist investors, they want to have some kind of special treatment and yada, yada. And, but really it sets the rest of your journey if you go for the specialists at the lower valuation, because they cannot just They will not just be there when the markets are bad. They can also help you with the development of your product. They have a network with partners, etc. All of that to de-risk your case, because it's already difficult enough to understand the molecule, to optimize it, to put it in people, to dose escalate it, and then find a therapeutic window. So going that alone, maybe whilst going it together with them, is probably a better option. So going forward, I would say, if you're in the starting phase, let the valuation, just forget about the valuation, not important.
Okay, I was just going to ask you, Johan, do you know any good specialist investors?
So let me answer the question this way. So there was a reason why the Anglo-Nordic conference was started some 15, 20 years ago. Some of you, I'm sure, have been there to present. And it was observed by London-based healthcare specialist investors that the prices for public companies in particular, but then as a consequence, private companies in the Nordic region, was much higher than anywhere else in Europe, apart from in Switzerland, where the same phenomenon has been observed, which is that we've had a strong pharmaceutical industry, now gone, that has produced a lot of wealthy people that have been investing as business angels and very good supporters of our industry, but as a consequence, maybe not having thought through the consequences of the valuations of the companies. So Håkan Gåker, who was one of the initiators of Anglo-Nordic conference, he thought, well, maybe if we can make sure that these companies from the UK and Nordics meet each other, they can understand that there is a difference in the valuations. Now, sadly, this has been fixed now by the markets. And I think the consequences is that we're going to lose some of our companies here, which is not good for the ecosystem here in Scandinavia right now, but it's going to be good for the ecosystem moving forward, because if the valuations don't come back faster than they do in the rest of the world, then we're going to get investors, I think, from other countries that are going to be more interested in investing in public or private companies here in Scandinavia.
I mean, you guys syndicate with investors on a global level, I wouldn't presume, or at least European.
We hope to.
Yeah.
And we have other venture investors in the room that definitely do. But I mean, one of the promises is a strong word, but one of the promises we've made to our investors in our fund is that for the Scandinavian companies, we hope to be able to attract capital from outside the region into the region. Has to be proven yet.
Yeah, I was going to ask about that. And Peter, your organization, you are also multinational. Is there an interest, and is it increasing in the Nordic region to invest in the Nordic region, in the life science companies here?
No, there's always been an enormous interest for the simple fact that there were so many companies. Echoing what you said, indeed, in the past we've also heard, valuations. We see them as Europe, Sweden, Nasdaq, US. But to put that into context, what you have here in Sweden with First North and Spotlight and Main Market is really a very unique setting. So on the continent, we see that is not really an option for companies there. They really need to grind it out earlier on with trying to find specialist investors, trying to be more creative in how they fund themselves. So there we would see that they maybe, for lack of a better word, give away more upfront, whilst if you speak to companies here and they say, yeah, we have interest from a pharma partner, but we don't want to give away everything already right now. Whilst there they would maybe say, well, we're only phase 1 or early phase 2, we'll start the partnership, we'll get a nice upfront, and they don't see it as giving away too much in the beginning. They see it as a natural way to finance themselves, which obviously in the last 10 years has been different here, thanks to or due to the liquidity that you've seen from retail, generalists, etc. Coming back to your question, yes, the specialists are really very interested in the Nordics. They scan lots of opportunities. They also make investments. You see international blue chip specialists in companies like BioInvent and many others. So they are looking at that, and more with these current valuations. also VCs and especially growth funds are looking at that, and they just will treat it kind of as a private company, take a larger stake, become a more activist owner. Having said that, in the US, there's 711 listed biotechs right now. 160 are trading below cash. So there's also enormous opportunities there for them. And also when we speak to these investors, they say, I have 1,000 biotechs to look at. You think I look at all of them? Mm-hmm. So also as a company, again, a reminder that these people are busy. So don't rely too much on your bankers because they can open a door, but they will not keep it open always. You need to be on it yourself.
But you are available on the phone 24/7.
Yeah.
Yeah, of course. Great. But there are so many factors here that are interesting. But when you say that there is great interest in the Nordics, and we've often heard that we have great science here, or we do have great science here. But then again, as you said, the dynamic or the special conditions that we have with the stock market, many companies going public early and so on. How many of the fantastic companies sort of are disqualified from an international investor's viewpoint as investments due to the fact that they are public and perhaps then very badly funded right now?
Those are two different questions. So, I mean, badly funded is, of course, a good opportunity for an investor because you can probably negotiate harder with the valuation.
You sort of come back to that a lot.
Right. But I think, I mean, and I've been on this stage and many other stages saying you get the owners you deserve. Think about that, okay? So, for all the companies that did go public when it was possible to do that, if you didn't have any other alternatives, I mean, great, you did something good. You got funding for your company. If you had other alternatives, now is the time to think about what would have happened if I've gone some other route. So I think coming back to the question, which was?
I just feel that what you just said is sort of like saying to your kid when they trip and fall and hurt their knee, and you say, "I told you so."
Yeah. Or in Danish, så kan du lære det. But I think the thing is that by going public, you expose yourself for exactly what's happened now, right? And on one hand, you have innovation and wanting to be impactful on saving humanity and making people's lives better. On the other hand, if you're a real entrepreneur, you want to make money. And I feel that some of the rush to go after, if you will, the easy money when the markets were open here in Sweden was driven by either the need for people who were getting tired of financing your company to get out, or the entrepreneurs actually wanting to get something that looked like they had money. And that now has its price in that the valuations are extremely low. And we have gone to our investors and asked, so look at the situation here in Sweden. We really should be investing in public companies because they're so low valuations right now. And they've said, yeah, but that's not why we invested in you. We have other people doing that, yet to be identified though. So we've talked to some of you guys about, okay, can you think of situations where you could place one of your programs in a private setting? Which of course are many different ways of doing that. Doesn't have to be a delisting, where you actually have a private subsidiary that gets financed by actors like us that want to act in the private arena. And we've had multiple discussions like that, and unfortunately at the end it's usually us saying that we didn't like the asset enough to go through the trouble of doing this the hard way.
Sorry we made you jump through all the hoops. I mean, taking public asset private, that's one. It could be an alternative route then to sort of, or divest something from your portfolio, perhaps. Peter, I'm guessing as a the kind of bank that you work for, do you see many different alternative options than to find financing these days?
Yeah, we do. And just to add, the valuations that we see right now are lower actually from a equity cash position than they were in 2000 and in 2007. So indeed, you can say valuations are low, and there is the opportunity. But indeed, it's now to see, okay, what companies will be able to prevail. You need to keep on delivering. But in terms of the alternatives that we see, again, trying to make the comparison Sweden versus other countries. Whilst here it's always been equity, and every year you do your 10%. You ask your EGM for your mandate renewal, and then you come by, you do your 10% or 20%. And on the continent, we do more often see, like I said, these earlier stage partnerships because they need it and also because they want it. Coming back to the international ones and how they look at Sweden, sometimes they do look at companies that they think they look cheap, but then looking in more detail into the program and where they have taken the program, they say, it doesn't really make any sense. And then if they would have had maybe some specialist help or a pharma partner, they would have probably guided them in a different direction. So no, it's not interesting because this is probably going to fail. So I think again, the help early on is really good to have, and not seeing it as we're giving away anything. But in terms of alternatives, people are a bit more creative on the continent. We see with convertible debt, with royalty financing, with selling off rights in smaller countries like Switzerland, or markets that they find maybe are not as important, like China, or convertible debt. We see it a little bit more now here in Sweden. What we hear sometimes is, yeah, but they're just going to sell the shares. Yes, coming back to your point, you get the owners you deserve, or let's say for every situation that a company is in, there is a certain type of financing available. But nobody else wants to, at this particular moment, finance you. These guys are there. They will help you finance so that you can move on. But indeed, they will probably not want to own your share. But in general, I would say just the openness of companies, and especially boards, to be a bit more creative in how to finance. And I think that's mainly because they are forced to do it. Whilst here in Sweden, because the liquidity has been there for 10 years, there's not really been a need. So again, I think the mindset, and there especially, I think boards, a bit more seasoned boards, can really make a difference.
So crisis could be the mother of invention. So then having this again, because many of the companies that we work with are private, public. They wish they were private, perhaps, but they are public, and now it's just, we're stating the facts. You should have done this, you should have done that, perhaps. Could have been better to do something else, but it's all a product of the public market and being extremely accessible, capital being thrown at them, and of course it's very easy to go to the candy table instead of the vegetable table when you're.
But I mean, public markets are a great tool. They're a great tool to raise money. They're a great tool to use your share as a currency and maybe help your company grow by means of M&A, etc. So I think public markets are a great way to go for companies. But indeed, you need to really have the mindset, okay, we're a public company. I need to deal with shareholders. I need to do roadshows. I need to do conferences, etc. And one thing I wanted to add is what we also see, especially in the US, which here is a little bit of a wait-and-see strategy still, is hard decisions being taken by listed companies, just laying off 30% of the employees. We have 3 projects. We're stopping 2 of them. Or we're doing a reverse merge because we're probably not going to be able to finance ourselves. So there we see that those kind of hard decisions are being taken, and we'll see more of that. And here it's still a little bit more, maybe we think about that next year if we cannot find investors.
But I think there's an element of maturity here also, because many of the companies that did go public were still preclinical or early clinical, and you're still in that if you will, development phase where the true value of your innovations have been proven. So I am of the strong belief that such companies should not be public, but then eventually the public markets are absolutely needed and are a very useful tool when it comes to scaling up, and especially when it comes to commercialization. And I think if you're moving towards that phase, using royalty financing or using debt financing, I think is a good tool. But the problem with that kind of financing, especially with the debt financing when you're still in the discovery mode or development mode, is that there are covenants that you have to follow, which usually are that all the money they lent you should be in the bank. And if you stray from that, they take the company away from you. So much more punishing than the other types of investors that you can work with.
But also in the private setting, private companies then using these alternative vehicles to fund in an early stage, that doesn't exclude them from your radar then?
No.
Good, concise answer.
And more tranched type of investment rounds we see now as well, both very often private, but also public, so that they say we'll give you a small amount now. If you reach a milestone, there's more to come. And we see also more kind of the structured equity product now, where it's topped up with warrants, so that investors have the possibility to say, okay, you did well, there's more to come. And there's not that many companies in Sweden, I would say, daring to do it yet, but slowly we are seeing that, okay, this is a good option.
And but then when you speak to many investors that are looking at public companies as well, but what kind of, because I know you and I talked a little bit about private placements earlier, that could have sort of seen a little bit of an uptick in that solution, but what kind of return do the investors expect then these days? I mean, and the risk appetite, is it completely?
Well, everybody wants to have 10x, of course, but no.
3 is okay.
Between 3 and 10.
That's generous.
No, but I think in general, what we do see is that focus is more on mid to late stage for public market investors. Again, also, like you said, the earlier stage ones, we've seen the preclinical IPOs at $200 million valuations. But we see let's say the public specialist funds shifting towards these mid to later stage assets, accepting, let's say, a lower return, but also very much from the viewpoint, okay, this earlier stage company could be very interesting, but how are they going to finance themselves? They're going to call me 3 more times, and at what valuation? So it's de-risking for now on the public markets still.
And Johan, I noticed that you only mentioned clinical companies. On your website it says near clinical companies, but you dropped that now.
No, we haven't dropped it. And as everyone in the room knows, you need a lot of money when you get closer to the clinic. So right now we're saying 12 months before the first dose in man.
I'm actually going to pick up a few questions here from the audience, and this is directed to you, Sound Bioventures. You mentioned that you've invested in 6 companies. What's your strategy during the upcoming year? Is there a target number of new investments?
So it's more a factor of how much money we have, but we're saying that we probably are building a portfolio of 12 companies right now. So the focus is very much on Sweden. And the US right now, because of the geographical spread we want to have. The 6 companies we've invested in have been in Denmark twice, Holland, Belgium, Spain, and the US. So we're lacking that Swedish piece.
Great. That actually, well, we are about to conclude, so I would like to ask you can you please give a piece of advice that can instill some hope?
Something positive.
Yeah, something positive to end with, please.
Well, I think the something positive is that you still see enormous amounts of money flowing into the sector. I mean, R&D spending is 10x what it was in the 80s, inflation adjusted. You see that the healthcare sector remains the second largest sector on the stock market after tech. When we speak to specialist funds, they continue to raise record after record fund. It's been a bit of a pause, but now it's coming back. Also because you see pension funds saying, yeah, we've dabbed a little bit ourselves in that public biotech, but you know what? You guys do it. And what we also see, I think, which could be very interesting for many people here in the room, is that big pharma, like you said, they've obviously have an enormous amount of cash. No, they are not buying First North companies. They're not buying it because it's cheap. They buy later stage assets still. I think of the 14 big M&As we've seen recently, most of them are phase 3 approved. But what we do see is that they do need to start diversifying their portfolio. So they're starting to invest more in early stage R&D partnerships. And there, I think in the US last week, there was a good example where a company which was worth, I think, $50 million market cap, got $100 million up front from, I think it was Lilly, for an early stage partnership. So I think there is the opportunity that these will be looking at earlier stage partnerships, and I think it's a good idea to do that. Don't think a bit of giving away anything. But so that money is really available, not to buy your company, but for earlier stage collaborations.
That's positive. Johan, do you have anything positive for us?
But I believe in the future, and I believe in this field. Now, I mean, if you have a strong innovation, it will survive. And unfortunately, if it's not strong enough, there is still a little bit of a valley to get through.
Perfect. Positive notion with a little negativity. I think that's still...
Reality.
Yeah, reality, yeah. Thank you, guys. We've run over with 1 minute and 42 seconds. I think that's okay. Thank you so much for your time, and give them a warm hand.